Okay, having understand about this concept of trade top range and down range now, understanding premium zone and discount zone, it has to do with Fibonacci, Fib levels. Fib is just a tool in the market structure. Fib is just a tool. Look at where you pick Fib levels here. Yeah. You can pick Fib levels here. But let's go into what we have. This is the tool, Fib tool. So Fibonacci, what is sorry? Premium zone and discount zone. Premium means, what is premium zone? Premium means something that is high. You get? Premium zone or premium means something that is at its higher peak. At its higher peak. That's called premium zone means. And discount zone is something that, take it as a normal layman understanding. Pay very attention. Imagine if you went to buy a laptop and the laptop is high. They tell you that the laptop is $200. And will you want to buy the laptop at the level of $200? No. You would ask them to give you a discount of maybe $100. Yes. So the meaning when the laptop was $200, meaning that the laptop is at a premium, is at the higher level, is at high cost. Yes. So the premium zone is something that is high. You won't like to buy something when the stuff is high. You always like to buy it when it's low. Is it not true? So you ask the seller and the discount zone comes in the forex market. And I told us that the only thing we do in the forex market is just buying and selling. That's the only thing. There is nothing else we do in the market apart from buying and selling. Buying and selling. So let's take for an instance, look at this trade now. Look at this trade. Imagine this is a laptop. You want to buy a laptop. Let me show us a concept of this premium zone. Imagine this is a laptop. You went to buy a laptop and they told you that the laptop is, let me say $200. The laptop is $200. They told you that the laptop is $200 here. And maybe you went to buy a laptop from ShopLite. And coming to the ShopLite, they told you that the laptop is $200. And you, knowing that they brought out a promo that in next 2 weeks, or let me say in next 3 weeks, that they are going to have a promo in ShopLite, and them having a promo that all the laptops, all the goods in the ShopLite will drop down. They normally do it, yes. So doing that promo, any laptop that they were selling $200, they will give a discount of maybe $90 in that ShopLite. So you being a wise man, you won't like to buy it when the price is high, knowing that in next few weeks that they will drop to $90. So what will you do? You wait. Is it not true? Or would you like to buy it when the price is $200? No. You will always want to wait. When they brings down the price, you can now buy the laptop. So, and I tell you that what we do in this market, like our key points, what sustains us is patience. So for you to be profitable, for you to wait for the market to drop down, you have to wait. Is it not true? So now, in that next 2 weeks, let me just say before that next 2 weeks, you are waiting for the laptop to drop down, for them to offer their promo. So the price now drops down to, let me say 150. The price dropped down to 150. It's still good. Is it not true? It's okay.
Yeah, it's okay.
It's okay, right? Something that you wanted to buy $200 now drops down to 150. is a good discount. I get me. Being at that $200, it has high, the price is high. I get me. But then dropping it down to $150 is also good. Maybe the next 1 week they're about to do the promo, they drop it to 150. It's good. I get me. So someone that has the money can go for it. That has enough capital, maybe this rich kid can go for it. But we that are patient traders, because you cannot be profitable enough being a good trader without having this culture of being patient. So me, I won't like to be buying this laptop when it's 150. I will still have to what? Wait. I get me now. Wait. So after, let me say, after that 1 week, they offer that 150. The market still drops down to the date they say they will do their promo, which is the 3 weeks. Then during that 3 weeks, the market drops down to $90, from $200 to $90. Wow. So now I can buy. Is it not true?
Yeah.
So here is now, let me say $90. Now I can buy from $200 to $90. Why wouldn't you buy? You can buy now. It's a very discount. That means understanding the concept of premium zone and discount zone. Here becomes your premium zone. That time the market was at 200 levels. Is now your premium, premium zone. And when the market now comes down, you consider it to be your discount zone. When they gave you discount price. Just the way a typical Igbo man will do. You get? So here becomes your discount zone. Simple. But you understand the concept now. You understand it. Sorry, I did not. Oh my God. Allow me to label. I like labeling my trades. I like labeling. Okay, so here becomes your what? Here becomes your what? Premium. Here becomes your premium, and here becomes your discounts. Thank you. Are you getting me now? So maybe after that, they now give a discount of $90. The next thing you will see they will do after that, their promo, after the ShopRite did their promo, bringing it down to $90. The next day after that promo, they will not leave it at that $90. The next thing you will hear is boom, they will move up. They will not even sell it again at 200 levels because they want to recover from their losses, because they are selling it $90. Many investors will come in. Many people will buy. If someone wanted to buy 5 laptops when it was $200, the person will wait. Once the laptop goes down to $90, the person can even buy 50 laptops because they have offered a cheaper price rate. So after this, the price will move. Boom. The price will move. Boom. I get it now. So this is the concept. So now bringing it down to this thing, we thought we learned that market moves by buying and say this thing we hear about higher high, higher low. It is actually buy and sell. Buy and sell. Look at it. Buy, sell, buy, sell, buy, sell, buy, sell. That's just it. The higher high, higher low is simply buying and selling. That's just what it means. So that's the concept of the premium zone and the discount zone. You would like to buy when the market is low. When the market is high, I mean to say, you always want to buy when the market is low. Are you getting me? So bringing the concept of the Fibonacci means that when you bring your fib here, fib levels here, how to draw fib, although is for bullish, you draw it from the lower structural points down to the higher,
That point.
you draw it from your lower value structural points down to the higher structural points. Fib. Look at it here. Don't know whether you understand me, but let me just be explaining. You are understanding, okay? Let me just be explaining. So let me go back a little bit. I said that in the market, the only thing we do is we be buying and selling. This up here is buy, bullish. You buy up, you sell down. So you won't like when this market, we don't rush market. We don't rush this trade. We don't rush it. Because I'm now teaching you guys how to actually trade, how these things work. When market is buying, is already buying, you don't rush it, you relax. Because we understand that each time the market buys up, it must come down. You understand the concept of market structure, that there will always be higher highs and higher lows. Meaning that market will not just keep buying. They will always give a discount. They will always come down and give a discount. That's the understanding. So each time market start buying, you don't rush and jump inside the market. You won't like to jump in when the market is $200. Is it not true? You won't like to jump in when the market is still high. You will always want to bring it down when the market, also buy it when the market is low. That is where this concept of Fibonacci comes in. Fib just will help you to understand your Fib level, where you want to buy. When you drop from this lower structural point to the higher structural point, you will see some levels here. This is the 50% level. This 0.5 is the 50% level. It's just the half. Like somebody buying from the $150 half. It's just the half. The half of this thing, you draw it from this to that, from higher low to higher high. So this fib level, this 0.5 is just the half of what you are applying for. So this 0.68 is coming to the discount. But at least if they were saying something $200 and they give you a discount of $100, half of it is something. You can go ahead and buy it, or maybe 150 is something. But in markets, in understanding forex trading, once markets start coming down, if market did not touch this 50%, don't buy it. Allow the market to do what they are doing. But once market reach this 50%, when you draw your fee and start coming down, see, you will now be observant of taking your buys to the upper side. That's how we trade. You now be observant. Our market keep giving you discounts. You now be observant. As we continue, we start learning about what we call institutional candles, how to place your trade, how to accumulation and distribution, how to enter from this analysis. But I want you to understand the concept of premium zone and discount zone. That when markets start approaching down here, start giving you discounts, that is where you should be expecting buys. Get. So we normally take our buys from these ones. Like me, I like to take my buys when the market start approaching 0.486. When market start approaching here, I start studying here to take my buys. So once market reach here, in most cases, market will start going up. Let me also show you something. Look at how market comes down. Market does not just it come down little by little, lower low, lower high, 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 lower low, lower high. Once market start coming here, you supply to break structure and start going higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, higher, low, higher, high, higher, low. So that's how this market moves. Yes. This is how the market moves. So you always want to wait for market to give you a discount before you take your buy or your sell, before in the market. You don't just jump into the market. So we use our fib to determine our entry. We use our fib to determine when market have start approaching our entry. And this fib is like a magic. You can even decide to be taking trade when market is 0.48 and you will still be making it in the market. Okay. Having said this now, concerning is just the opposite of bearish. You should also bear that in mind. This is also the opposite of bearish.
Good night, sir.
It's the opposite of bearish. I want to know whether I can put the inverse. Okay. So hope you are following me. So the inverse side is just the opposite. It's just the opposite. I don't know whether I should do it again. The bearish. So the guy that is saying that his phone is off, have patience. If your phone off, can go to bed. Okay. So this is it. This is for bullish. So I have to look at now, take note of this fib. This is my fib settings. I want to show you my fib settings because when you open your own trading chart, your fib may not be like this. I'm telling you, yes, your fib may not be like this. So it's always good when you double click it or change the settings. This is my fib setting. You can screenshot it. This is my fib settings. This is my Fibonacci. If I mark this angle now, see something has appeared here. Let me show you. Something has appeared here. Your own will not be like this. So your own may be too big. So this is my fib setting. So that you will not go and see something now. So this is how your own may look like. But we don't need all those lines. I will mark so many of them. I need this level. 50% level is good. And remove this level is of use, no use. Remove this level. I only need from 50% down. Okay, my 1% is very important. Okay, this is all I need. So you can screenshot this field. That screenshot is just for purpose. No. So that's it. Okay. Hope you are following. Let me do the bearish structure. For the bearish, I repeat, for the bearish is just the opposite of this bullish. Understanding that when market is giving you lower low, lower high, lower low, lower high, lower low. Let me just stop here. The market is giving you that you should not just take trade when the market is at the low. You should wait for this market to retrace back and give you a discount. For example, after seeing this market, you mark out your trading range. Here is your top range and here is your down range. Your top range and your down range. So after marking it out, you can select your fib. For bearish, you draw it from top range down to the down range. But for bullish, you draw it from your structural down range to top range. That's how to draw it. For bearish, you draw from top range to down range. For bullish, you draw from down range to top range. So So after seeing this, once you draw your range, you have identified your range and you draw it, you start observing when this market will start going low, start creating a series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. When market start approaching your 0.78, you start observing. Once the market touches it, in most cases, market will start breaking structure and start being bearish to the downside, to the downside, to the downside, to the downside, to the downside. In normal sense, these markets have just given you a discount. Understanding our discounts and premiums. Before it was at the prime here, but it came and gave you a discount before continuing selling. Remember, I told us that markets, the only thing we do in the market is buying and selling. Market sold, sell, buy, sell, buy, sell. But buy, bought, and you're expecting to sell, and market sell again. Remember, in bullish, you take more of buys in bullish. When market is going bullish, like here, higher, 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 what you're expecting to be taking more is buy for bullish structure, for bullish markets. But in bearish, market is going lower, low, lower, high, lower, low. What you're expecting to be taking more is sell. You want to follow the market as the market is selling. So you don't want to be buying when the market is selling. So when the market is selling here, but you're expecting, when the market is buying here, you're expecting to join the this market here and sell. Market will go again. So when this market comes here, about to sell again, you wait so that this market will come and give you discounts for you to join the market and sell down. Okay. Let's combine everything that we have learned. Is there any question? Let's combine, before you ask a question, let me combine everything we have learned so far. Let me combine everything that we have learned so far so that we have a better understanding, okay? Okay. Okay, let's stop here. So now, let me use bullish. When the market is giving you a series of higher high, higher low, higher high, higher low, and higher high. Let me stop here. Higher high. First of all, what you do, you identify your structure. You can mark it, series of higher lows, these higher lows, and you can mark higher highs. You should mark higher highs. So this is your structure. You have identified that this market is going to bullish. Is it not true? It's true. You have identified the market is bullish. So, and in the bullish structure, we are expecting to buy, continue buying, because we understand in the market that market will be giving you more of buys in the bullish structure. Don't worry, we are going to go to the charts and look out of this thing we just being taught on. So, having seen this, the next thing you should check out for, you have identified your structure, which is the market is bullish. So having seen this, the next thing you should look out for is your trading range. Are you getting me? Your trading range. That's the next thing. You should look out for your trading range. And here we say that the range is the highest structural points. So this is the highest structural point. You mark it, and you mark it. And also, having picked the highest structural point, you also pick the lowest structural points, which is your valid higher low. So this is your trading range. You can identify them. Your down range and your top range. Is it not true? That's it. Let me reduce the size. Okay, your top range and your down range. Now, so we are expecting this market to come this way before going up. Is it not true? To create another higher low before creating another higher high. So that means we are expecting to buy from this market. Is it not true? So no, you not just come and buy here, as I said, you not just come and buy here, because here the market is still high. That's where so many people make mistake that they will just jump inside the market. Imagine buying from here. It's risky, because if you buy from here, this market will still come down. Remember, I taught you guys that we are not the one that is controlling this market. There are big banks that are controlling the market. So if you went and buy here or here, you are wasting your money. Before market will go down and give others discounts while you are buying here, your small money in your account has finished. I get it. Your small money in your account has finished. So it's very good, as the market is giving discounts, you should wait, because our strong point, like strong benefit in this market, is patience. So having said this, when market is giving you discounts, look at how the market normally comes and gives discounts. Start slowing down, start giving you a series of lower low, lower high, lower low, lower high, lower low, lower high, lower low. But before then, remember to draw your Fibonacci. Your Fib is always here. You draw it from your down range to your top range. So let's start drawing our lower lows. I'm going to start giving you lower low, lower high, lower low, lower high. If this market stop here and start going up, don't buy it. That means the market will not give you discounts. Leave the market to go. So the market will start giving you lower low. Touch your 50%. Once you touch your 50%, be agile to start buying. I get it. Lower low, lower high, lower low, lower high. So as it's coming down, for me, once the market touch by 0.78, I will start thinking of buying. So immediately market touch this, most of the times market will start breaking structure and start going up, higher, high, low, high, low, higher, high. That's it. Yeah. That's the basics. So is there any question? Because as you are babbling, is there any question? Okay. Let's show us in the chat. Look at example here. What is our structure? The structure is bullish. Is it not true? I'm being fast now. The structure is bullish. This is higher high, higher low, higher high, higher low, higher high, higher low. But we are not going to push this one, because just for time's sake. So imagine this market was not here before, but I want to show you something. After identifying the structure, we pick our range. Our range is this for this market. Our range is this for this market. Is it not true? These are top range and these are down range. Because of time, we pick our Fib. We draw our Fib from top down range to the top range. Now look at what this market did. Look at now. This market, what I'm teaching you guys, this market, after reaching this high, started dropping small, started creating a series of lower low, lower high. I see it. Lower low, touch our 50%, still created another lower low, although did not touch this 0.786, but at least it went very deep. If you take this buy, you are good, and start breaking structure to the upper side. I see in this magic now. I see it. So this is the power of discount and premium zone. Yes, this is the power of discounts and premium zone. I see it now. You saw it. So structure, the market came down and give us discounts. Let's look for another one. They are everywhere in the market. They are literally everywhere. Let's look for the bearish one. Okay, let's look for this one. Market is bearish, and it gave us, let's take this one to be lower high and lower low, and here to be our top range, and here to be our down range. We pick our fib from top to down. I see it now. So when this market wants to continue selling, started here, and maybe when this market is there, started giving a series of higher high, higher low, higher high, past our 50% level. I see it now. Higher low, still went below, but although did not touch our 0.78, most of the time doesn't touch it. But at least at the middle, touch it before start breaking structure, start going back. I see it, and so big. Imagine if you took this sell from here, you'll be gaining all the way here, which is a huge amount of money. Are you understanding the concept now? So that's it, guys, that's it. I get you now. So this is it, guys. So understanding this will really clear a whole lot of things. Is there any question?
No, sir. I dropped the video. We will still watch it.
Huh?
No, sir.
Do you understand this concept? Do you understand it?
Yes, I understand the range. But more after, if you drop the video, you keep on watching it. I'm sure we have a lot of questions to ask.
If I drop the video, you will watch it, man. Yeah?
Yes, sir.
Okay. Yeah, believe. Yes, you're going to. It's what you can understand. It's not that big concept. Okay. Let me show you another example before my time goes. Look at this one now. This is a current trend. I get it. So what's the structure here? Let's pick the structure quickly. This is higher high, higher low, higher high, higher low, higher high, higher low, and what? Higher high. This trade is still going. Is it not true? And this trade is what? Bullish. Is it not true? So after identifying the trend, which is bullish, what are we going to do? We mark out our range. Thank you. So our range is this one. Our structural higher high. It's not, that's the highest high. To our structural lower low. Is it not true? Yes. So you would like to enter this market here. You would like to jump inside this market here. Are you getting it? If you jump inside this market, you are making a huge mistake. Are you getting it now? So you like the market to give you a discount. The market now is at its premium zone, highest zone. Are you getting it now? So you would like to enter when the market is at the premium. You would like the market to give you discounts. So the market coming down, the concept of the market coming down is called discount zone. So after identifying your trading range, remember here is your top range. And here is your down range.